Attention A1 Trading Show fans. If you're looking to get funded, we've got a solution for you. Our partnered prop firm FX2 Funding helps traders get access to up to $200,000 in trading capital. FX2 Funding is not your average prop firm. We've chosen them as our partner because of their fair examination rules, their professional and available customer service, and they have an outstanding reputation in the prop firm space. Here's a quick look at their evaluation process. First, they don't have a time limit on their evaluations. That means that you can take your time when passing your evaluation. There's no pressure to rush your trading. Second, there is only one phase to pass in their evaluation before getting access to your funded account. Also, their evaluation fees are fairly priced and fully refundable upon passing. Once you're funded, you'll be able to keep up to 85% of your trading profits. Finally, a rule we know swing traders will love: you can hold your positions over the weekend. For a limited time, get 15% off any of their account challenges with promo code A1Trading15. That's 15% off any account challenge with code A1Trading15. If you're ready to get funded, we're dropping a link in the chat right now, and you can also find it in the description down below. So go ahead and get signed up today for 15% off with promo code A1Trading15. Now, back to the show. Attention A1 Trading Show fans. If you're looking...
Hey everybody, welcome back to another live stream. We are back in the markets here following the ECB's decision on their interest rates. We did get the 25 basis point rate hike as expected here. Went from previous 4% up to 4.25%. And in this live stream, what we will be doing is talking about trade setups, things that I'm looking at myself, as well as probably some Euro and USD coverage. Definitely an interesting time in the markets this week with the Fed meetings yesterday. And of course, now followed by the ECB's refinancing rate, and of course their press conference coming here in the next hour or so. Welcome back everybody to the live stream. We do this every single weekday, Monday through Friday. We've got a show here that we put on between myself and the producers here behind the scenes. We do our best to bring you guys coverage each and every day. We bring on guests, we bring on all sorts of different talented people with different ideas and concepts. And of course, I try and as your humble host, I do my best to try and keep everything rolling. If you guys enjoy my shows, well, I should say our shows, I'm sorry. If you enjoy my commentary on our shows here, I want to encourage you to hit that subscribe button. If you're new, hit the thumbs up button. Let's jump into some setups here for today. Gold, I'm long. I'm still in my gold trade from yesterday. Those of you guys who are inside of the VIP group know that I took a long position yesterday. It is floating in profit. Here is the position so far. It's up $115. It really hasn't moved too much from my entry, but following all the commentary yesterday, I decided it was a good time for me to go ahead and look for gold longs. And intraday, we got a pullback, in which case I was able to pick up a buy trade. So I am long gold, and I still think that we have plenty of upside here on the gold market. So for those of you guys who are watching with me here, if you're a gold bug today, I'm looking for continuation. I'm looking for bounces off of these areas. I don't really want to see these levels break too much stronger to the downside. And if they do, I'll probably stop out for a loss if necessary. Context, my stop loss is below this low that we had from yesterday's Fed meeting. We had a big shoot to the upside, and with that strength, I did buy on this pullback. And within that pullback buy, what I did was I said, okay, well, if price breaks through the previous low, that's going to nullify my idea to be long. And so basically what I'm trying to get at here is I went long on this pullback, stops below structure, and I'm looking for a continuation of the upward trend that you guys see here on the screen. So it's chattered around since the entry, right? We've had some volatility back and forth, but I am still willing to hold until, like I said, we get a structure break to the low side. If that happens, that'll be my trigger to go ahead and get out of my trade. So for anybody who is also watching gold, that's where I am at personally with it. Let's take our attention, however, to kind of where we're at today with the big ECB press conference and meeting that we have today. So refinancing rate, as mentioned, did come out at 25 basis point rate hike. So ECB came out raising rates as expected, and up to 4.25%. Where does that leave us with the euro? Well, euro dollar off of the daily chart, in my opinion, still looks strong, okay? So I am still looking at Euro USD longs, right? Well, not necessarily looking to get long because I don't have it on my watch list right now. Web Trade says the EDGEFINDER watch list has been a bit lacking with symbols recently. Yeah, honestly, Jason, that is true. And here's the thing, right? When the EDGEFINDER is slim pickings, meaning there's not a whole lot of signals going on, a lot of strong biases, I don't see that necessarily as a problem. I'm still, again, I'm taking advantage of these gold pullbacks to the best of my ability. I'm trying to ride that gold bullishness. I will also be keeping an eye on the indices, NAS and S&P. Euro yen could be interesting. Not too much on the sell side here right now. There is NZD JPY, NZD CHF, both of which I'm not usually trading those currency pairs. I usually stick to the USD crosses and then, of course, the indices, gold, etc. Anyways, I thought this was interesting. Bitcoin is on the list as a strong buy. What's going on with the Bitcoin world right now? Bitcoin USD. Let's see. Just a quick look at Bitcoin. You know, to me, I even if the fundamental factors are not looking bearish, I still just don't love this chart, to be honest. This is just, you know, if I'm going to trade Bitcoin, usually I want to trade it in heavy momentum, right? I want to buy Bitcoin, as crazy as it might sound. I want to buy Bitcoin when the craziness begins and it's really starting. But right now, look at Bitcoin on a weekly chart. It is just, you know, not super interesting recently, right? You had this big sell-off and it's been crawling, but it's not the screaming uptrends that we have seen in the past, right? So until that returns, I'm probably just on the sidelines with something like Bitcoin. S&P 500, NAS, I'd like to take a look at the S&P, see where we're at with that. S&P 500, look at this, breaking through the highs. Really, really strong, guys. The S&P continues to just be a monster. Look at that. S&P 500, I would say, you know, at this point, bulls are just in full control. And if you do get any pullbacks, in my opinion, I'm looking at longs, right? So I do want to be a buyer. I want to be a part of this run, but the only way I'm going to do so is on pullbacks. Now, I should say I am part of this run through a couple different ways. I have a bullish play going on silver. I have a bullish play going on the Russell 2000. I have the gold market. I'm in a long trade. So that's kind of what I've been up to recently. By the way, guys, there's 469 of you guys here. If you are enjoying the show, do me a quick favor, hit that thumbs up button. And as we get started here in the show, do me a quick favor and also just comment where you're tuning in from. It's always cool to see where you guys are watching the show from. We get people from all over, people, you know, from Thailand and France and the UK and all over Africa, South Africa, right? Nigeria. We get people from all over the world. So comment real quick where you guys are tuning in from. And again, thank you for being here. So again, for me, for on the S&P 500, I'm interested, but it's got to be a pullback, right? So if I get my fibs out, I am looking for, you know, at least something like a 38.2 to 50% retracement. This would bring us back into kind of this area, which I do like, right? So I'm looking at this and I'm saying, I want to be a buyer, but I've got to see the healthy pullback. And until that happens, just not really going to force anything. Again, that S&P 500 just looking really, really strong. Back to gold here for just a second. So I am in my gold trade still. So if this thing does roll off a cliff, I will be taking a stop loss here today. My stop is below yesterday's meeting lows. Of course, I'm referring to the Fed meeting that occurred yesterday. Right. So 2 p.m. yesterday, Eastern time, 2 to 3 o'clock. We had a little bit of volatility on the gold market as well as most markets. Let's take a quick look at the dollar as well. DXY popping up here recently, interestingly enough. Let's go see. Do we have anything that could be? Yep, we just had USD. It's come out. I'm sorry for the delay there. USD advanced GDP is pending. Unemployment claims. Of course, we get this every Thursday. We had some other economic figures come out. These seem to be pending. It seems to be good for the dollar. Someone's saying in the chat. Yeah, here's the daily chart of the dollar. Look at that. Really erased some of those downside moves. I still think that, you're hitting a level of resistance here. It does seem like it had a late delay, but that 50% retracement did hold. But it'll be interesting to see how this news that we're getting right now seems like it's really delayed. I don't know if this is a forex factory thing or what, but I'm trying to refresh the page to see. Oh no, are we losing internet? No, Frank is still in here. Okay, weird. I can still see some stuff moving. Okay, we didn't lose internet. I think Forex Factory just had a freak out, guys. Okay, there it is. Yeah, it was Forex Factory. Thank goodness. Okay, yes. So in terms of numbers here, better than expected on the jobs area. Advanced GDP was stronger than expected. So U.S. economy looking pretty solid here. GDP price index, core durable goods orders up, durable goods orders month over month up. Some optimism, some strength here for the U.S. economy, which would drive a little bit of strength to the USD, as we're seeing here today. Yeah, I mean, it's interesting. I think that, as you watch this watch list, we've been bullish on the indices. I've been trading them quite a bit. I do have, what do I have? I have IWM. I sold puts. This is a bullish play on the Russell 2000 that I'm in. It's a small trade, but it's a weekly put that I sold here, expiring the 7th of August. That one is doing quite well. Silver is also doing pretty well for me. I sold a put on silver, so that's two bullish plays, silver and indices. Again, I am also long gold, not going so hot so far. Let's just stay on that gold trade. Yeah, it's not going so hot, right? I may get stopped out here on stream, which would be fine. I had a really good week overall, so it happened. But yeah. Real quick, guys, we're going to go to Frank and see what he's up to in just a moment, and then we will be joined here today, of course, for our Thursday technical session with Miko and Marco. I'm not. That should be just shortly after Frank, but we're going to come to them after Frank. Real quick, we're just going to take a quick break. For those of you guys who are not familiar with our software tool that I keep referencing, there is a free way to get access to it. I genuinely mean that. It is 100% free as long as you sign up with our partnered broker, which we're going to show you a quick commercial break about. If you're interested in getting our software, listen up. This one is for you. Check it out.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading cost, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
Back, joined with Frank, who's repping the A1 Trading shirts. Frank, we've done this exact thing before. You wore the new A1 Trading shirt, and I wore the old, tattered and destroyed shirt that I have. So what's going on, man?
We must be hanging out too much.
Yeah,
we're
probably
in
so.
sync.
It's almost
but
like
I'm
we work in the same spot.
The same office or something.
Yeah. So Frank, are you still in gold?
I think with that move, I got stopped out at break even. But the good news is, I think, well, I know I'm still in the S&P, so I'm happy with that. I just trailed to break even on that. But I'll probably further trail at some point after this stream. I just wanted to ensure that I wasn't going to get stopped out. But yeah, just in
that's
S&P
awesome. That's awesome. S&P 500 is such a monster right now. It had like a big overnight follow-through move off of all that volatility yesterday. Of course, for those of you guys who missed our streams yesterday, we covered the press conference that followed Jerome Powell, testifying in front of several people on the panel that had questions for him. And long story short, the market really liked his commentary. Again, we're at a very different point than we were perhaps a year ago. Now, the Fed is kind of taking it meeting by meeting, whereas they used to be saying, we see no end to inflation in the short term. We're going to keep raising rates. Market didn't like that so much, but yesterday, again, we have the opposite tone kind of coming in, where it does seem like they're softening their, there's no immediate danger, I guess, to what the Fed is seeing right away. So again, markets love that. Frank, you're long S&P 500. You got stopped out for break even on gold. Sounds like you're playing those two better than I am. I do have, I think you might have seen, I've sold some puts on indices, but for the most part, I'm not, I don't own any strict trades open on on NAS or S&P, but I was looking for pullbacks. I think I might have missed my shot here because again, the S&P 500 and NASDAQ breaking out, and that Dow, Frank, that Dow is just insane right now. What do you think on Dow? Do you think the Dow continues to kind of outperform like it has been, or what do you think?
I mean, I guess if the blue chips are just doing better earnings wise, I think that's one of the things pushing stocks higher. Plus the good economics news, because usually you would think, okay, because good numbers are coming out, the Fed's probably going to start to, I guess, be more aggressive on the rate policy. But that was, what we thought before. Now most people are expecting the Fed to stay where it's at. I think the Fed watch tool is pretty high in expectations for a pause in August or the next meeting. So just good economics numbers now, I guess, just means good news overall for the stock market. And yeah, the Dow, I'm not really sure entirely why it's outperforming everything else, but it's kind of rare to see.
Yeah, it is interesting to see. Of course, what we're referencing, guys in the audience who are newer to indices side of things, the Dow is traditionally used as kind of the value index, right? It's full of, Walmarts and Coca-Colas, like the really stable big companies in the United States. The S&P 500 is, of course, a broader 500 different stocks that make it up. And of course, the NASDAQ is mostly tech and some finance stocks. So NAS tends to be the most volatile. So it's interesting to see the value stocks performing the best. Anyways, Frank, to also follow you on that, it's interesting too that when we take a look at retail sentiment, here it is almost without fail every time retail traders are super short the Dow, despite it being the best performing index. Very interesting. And it goes perfectly in order. Look at this, S&P 500, the second best performing, second most shorted, and NASDAQ, the third best performing, the third most shorted. Very, very interesting to see that. So what we're looking at for those of you who are newer to the streams, we do like to track or keep an eye on retail positioning. This shows us what the amateur traders on average are doing with their positions, what they're buying, what they're selling. And I find it really interesting that as the indices continue to run higher, at least on FX brokers that we pull from, there's a huge lean to being bearish these strong rallies. And it does ask the question, Frank, is there some big short squeezes going on these indices? And again, how far can they squeeze higher?
A short squeeze? I don't know. Usually you would see that for stocks going to the downside, right? Or am I thinking the wrong thing?
So short squeeze meaning all the shorts, all the people who are short are getting, they're getting beat up by a move higher.
Well, I guess you could say that, but I'm not really, when it comes to retail sentiment, I don't really look at their positioning. I kind of just focus on what smart money's doing. And
sure,
they're kind of doing the opposite, I guess. So I don't know if you could call it a short squeeze or not, but you'd probably know better than me on that.
Well, it is mentioning smart money tracker. I mean, it's an interesting thing to study as well. You've got this is another, in my opinion, this is kind of the concerning side of the indices right now, is that, Frank, we've seen a lot of buying going on things like we saw for a while a lot of buying on like the NASDAQ and the S&P 500 and the Dow, but we've since then seen a little bit of slowdown in that, and now actually staying kind of stubbornly on the short side of the S&P 500. This is, of course, the hedge funds from the COT data that we're tracking. I don't know about you, Frank, but that to me just signals like, okay, just be very careful that you're not chasing this market, because again, a lot of smart people are saying that it is kind of overextended, and I'm not looking to short it myself, but does that kind of raise some red flags to you as well when we get these screaming up moves? Or do you kind of just say it is what it is, it's running strong, stay with the trend? What do you think?
I mean, it always does this, and it's always the same case. Instead of chasing price, rather you'd probably want to follow price, as in you want to see where it's going to go. And if it confirms something like, say, a break higher or a pullback and then a rebound from that, and follow the trend, follow smart money, follow what they're doing. The majority of them are still short, but over time we've seen change for the past several weeks, maybe months now, where the majority of the time they're just getting more and more bullish on this index, on stocks in general. But that's because they had a whole year of, being long dollar and a year of a bearish market in the stock market. So
Sure.
just things unraveling, I guess, and just a shift in sentiment overall. So
you mentioned the dollar, Frank. I just wanted to pull up the chart here. Dollar, speaking of today, some economic numbers that kind of bounced a little bit on the dollar, but I'm still pretty bearish on the dollar, especially as we pull back into some of this structure. I think that there may be some opportunities. I mean, this is why, you and I are looking long indices, long gold. It is somewhat of a play against the dollar. So I don't know. I kind of have, this is I keep coming back to the dollar for my trade setups, even though of course I'm trading gold and I'm trading the NASDAQ and I'm trading the S&P 500. I have like a close eye on my second monitor all the time on the dollar index, because I want to see if this level cracks. If this thing rolls over, I want to be in a trade. And if this level breaks out and makes a move higher, that's probably going to be where I take my second trades, but I'm probably not going to take any trades in no man's land, if that makes sense. So I'm almost like basing my trades off the dollar right now. What are you looking at the dollar at all? Or do you think that, is there that, of course, that possibility that the dollar strengthens while the indices strengthened, that we saw, a couple of months back?
That is possible, but I'm looking at dollar in terms of dollar pairs, as in I would say euro dollar right now. The pullback on that chart on the daily looks pretty good. I'm pretty bearish dollar overall. So I don't think any kind of, I don't know. If we see a close on that recent candle that we just looked at, I guess it could suggest upside, but I'm not really looking to trade any upside on that, because I think it's very limited for the dollar at this point. Euro dollar looks good to me. If we can see a pullback in a completion to that recent top or that trend line, I think I like a long play here. But this initial reaction of just being bearish on what the Fed did yesterday, leaving the indication that they're going to pause, and then Euro today hiked, but they're still battling stubborn inflation, like more so than the dollar. So who's going to be more aggressive? I think euro in this case. So I'm bullish on this pair, but we're just gonna have to wait for some kind of confirmation on the technical side. But yeah, not bullish dollar.
Yeah, no, I like that. I like that analysis, keeping it really simple. You have the two central banks, and when we talk currency pairs, that is, of course, what we generally gravitate to is, behind the scenes, guys, on the software design side, when you guys see us talking about the tools that we're building, Frank and I yesterday we spent like an hour just on a whiteboard, just writing out calculations for how we want to score things. And that involves kind of like really digging into key metrics. Like, for example, like really studying inflation. And when you look at inflation in Europe, in fact, let's do it. Why not, pull it up if we have the data. So let's go to the central bank forecast. This page takes a second to load. But the point is, when you're taking a look at the two central banks, right? You have to understand central banks are going to raise rates to squash inflation. They're going to cut rates to increase inflation, to get the economy rolling again, right? Right now, the US is seeing the results that it wants, but Europe is still kind of behind in that journey. It likely will follow suit with the US, but they're behind in that. Expectations, this is a tool that Frank and I have put together. The central bank forecast allows us to get an idea as what projections are looking like for central banks. What you'll notice here is that the Euro area does not have any projections right now to cut interest rates. That is a slight different story than the US expectations, which are for interest rate cuts to occur in the back half of 2024, and that we've somewhat reached close to the peak of where interest rates are likely to go. Now, why does that matter if you're a currency pair trader? Well, if you understand one central bank is likely to be more hawkish, meaning probably their currency goes up, versus a dovish one, there can be some excellent extra flow behind your trades. If you're looking at purely technicals, that's fine. But oftentimes understanding kind of the fundamental back end, the backstory behind of this and where central banks may go next with their plans can be really, really powerful. So that is, of course, what we're trying to illustrate with the software tools that we offer here at A1 Trading. So again, we're repping all the brand. Frank's got his shirt. I got my shirt. We're just putting together tools each and every day for traders. Frank, I want to thank you for coming on, sharing your ideas here with us. Interesting idea on the euro. I do like that call out. And of course, congrats on your S&P 500 trade you got running in the group.
Thanks.
All right. See you, Frank. Yeah. So yes, Frank is long S&P 500. I am long gold. It's not going too hot, as mentioned. I may get stopped out of this one. Actually, I might have just gotten stopped out. I think I just got stopped out of gold. It's like I said, it's fine. I've had a pretty hot week overall. And, gold rolling over here just shows that my entry idea just didn't work out as expected. It initially popped in my direction, but didn't move quite enough for me to really trail a stop. So I'm just going to look to get out of the way of gold, and I'm going to look for another opportunity to trade this one. If some bullish structure comes back in, I will be interested. Real quick, guys, we're going to take a very brief break. Before I do, actually, let's just do something. If you guys would like to trial out our software, we do have ways for you to get access to a free course, trial material. We're going to drop a link in the chat right now. Just click this form. This form will take you to a place where you can get access to a whole bunch of free resources to learn more about our tool. I know it's kind of hard to go over the whole thing in just a quick live stream. So click this link that's being dropped in the chat right now. Once you click that link, just put your email in there and we'll shoot over some information about the software. So, and then also with that said, also there it is. The link is right here. So click this link. And also, we'll drop one more link as well. If you'd like to direct message us right now, you can also do that. If you have any questions, or if you'd like to hear about discounts that are being offered by our team right now, just click this link, which will take you to a direct message center to chat with a real person on our staff. With that, so we're going to take a quick break, and then we're going to come right back here in just a minute to Miko and Marco to go over some technical trading setups here that they are looking at. So Technical Thursdays is starting right after this. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show. All right, guys, welcome back. We are here with Miko and Marco. What's up, guys? How you doing? What's up? How you guys treating this week? This week has been crazy.
Hello. Hello. Yeah, it's been an interesting week indeed. Very much so.
Yes, it's good.
Took a loss on.
It's good to have you guys both back on the show. Miko, you said NZD USD. Sorry, there was a little bit of delay there for a second. You're trading NZD USD. Tell us about the trade. We'll let you share your screen and take over for a second.
Okay, sure thing. So yeah, I had a short position on NZD USD this week. On Wednesday, I believe I entered the trade. So yeah, I took a loss on this position. I was looking for some downside. I entered the trade on this candle here. Stop loss a few pips above the highs and was looking for a push back down to the lows and further as well. Had a nice trend going on the 4H and the hourly, so I was basically looking for the continuation of that nice little break and retest of this area here as well. Had some couple other confluences going for me, but yeah, it was kind of an interesting one because I entered the trade and we also had FOMC later that day, so it was kind of seeing, okay, is FOMC going to go for me or not? And I was kind of hoping maybe FOMC could push hit my first take profit, go break even, and then maybe take me out the trade. But yeah, I had a bit of whipsaw back and forth, but eventually it did take me out the trade. So yeah, took a loss on NZD, but that's the only trade I've had so far this week. So quiet, but an L on NZD. So yeah.
Yep, fair enough. So I took a loss on gold. Miko, not so hot on NZD USD. But here's the thing, guys. I want people who are watching the stream, I want them to hear that stuff because the markets are not easy, and it's just so it's so crazy to me that, as a newer trader, you don't even realize that all these people on social media that only ever show their wins. They never talk about times that are tough or losing trades. They paint a really false narrative about what the markets actually are like. In reality, profitable trading is like having a slightly weighted coin, very slightly weighted coin that you just flip over and over and over. If you had 52% odds on a coin flip, eventually that profit is going to play out, but you're going to have tons of losses in between. That's the difference between what people think trading is like. They think it's like a 90% weighted coin, and the reality is it's like a 52% weighted coin, right? It's very slight edge over a long period of time. Anyways, Marco, are you doing better than Miko and I this week, or what's your have you traded anything?
So this week I haven't taken any trades. I was looking at the Euro pairs, especially. So this impulse right here. Just a second for it to load. But yeah, now we got a clear momentum shift, clear aggressive retrace with the final candle. And now my whole trade setup is kind of negated. So currently I would be looking for shorts. I mean, if I just measure this one candle, it's pretty much bigger than anything in the par price action. So definitely the sellers have stepped in. Same on the Euro Japanese yen. So I was definitely looking for a buy setup, especially after this descending channel. But yeah, my setups kind of got negated with the current live candles. So right now I'm just pausing a bit, just waiting for a bit more. Let me just run through the rest of them. AU is range bound, AJ range bound as well. The pound looking really good to me. This one had an ascending channel right here, so I expected it to drop, which it now did. So I would be looking for a short entry right here. And the final one is NJ, just very, very flat, very range bound, so nothing really. On my watch list currently, it's mostly EU and the pound, but didn't have any trades. I had some trades last week. One was a loser, second one was a break even. So yeah, this week has been pretty slow for my personal trading style.
Okay, fair enough. So Miko, you talked about your NZD USD trade that didn't go so hot. My gold trade didn't go so hot. Let's try and be, I guess, forward looking about what's next. What's the next thing you're looking at? Are you still looking to play NZD USD again, or are you on to anything else? What's on your watch list today?
Yeah, so with NZD USD, I'm no longer really looking to get into any trades. I'm keeping an eye on the pair, especially with this newfound momentum here, especially with the DXY as well. So I do have a bearish bias on the NZD USD. However, after clearing some strong resistance, we now got support beneath us. I don't really want to be selling into that area. So I'm kind of just backing off and seeing what happens. We're coming up to the end of the week as well. So I'll be looking at the daily and the weekly kind of closures too with this one. So I'm still interested, but nothing yet for a trade. I'm keeping my eye on AUDUSD as well. This one I was looking for some sales too. Didn't quite get a setup, but I'm interested with this one because we're coming to a very, very big level on the daily chart, which price keeps kind of fluctuating and interacting between. As you can see, resistance once, twice, a third time. We had a big fake out to the upside above that level. We repeated that same action again above that level. We came and kissed the same high, came back down. And now we're struggling to break through it. So I'm waiting to see how this daily candle will close. Will we close with a big wick to the upside? If that's the case, could potentially give us a move to the downside. If we close back above the level, then we've pretty got a high probability of a push back to the highs there. So I'll be looking for a break and retest and a continuation on Friday or Monday, depending when I get the entry signal. So I'm keeping an eye on AUDUSD, but I'm pretty neutral right now, just seeing how price reacts with that level. Same thing with Aussie CAD as well. We've got a big old level here too, which potentially, again, big wick through the level on the daily chart. We're still 8 hours left, so nothing cemented just yet. But if we can hold that, possible sells back down to these lows. If we do break through, might see a push back to the high there as well. And I'm also keeping an eye on Pound Aussie too. I'm looking to see if we can catch another higher low. Got some nice higher lows building up here as well with the trend line and this broken support here on the left too. So I'm waiting to see what we can do coming to that trend line and that area of confluence. If I see some nice wicks, nice rejection, I'll be looking for a buy back to the highs down the left. So those are mainly the pairs I'm interested going into the end of the week and next.
Fair enough. Yeah, no, I think just following all of the news that we had this week, you're getting some really interesting, some reversals as well as just some big moves. I mean, the indices right now, for me personally, are the only thing that are really, really trending in one singular direction. You're getting, for me, a lot of back and forth in terms of the currency pairs. Dollar yen, I would say, a pretty big breakout here today. The dollar showing some strength, which I thought was kind of interesting. For those of you guys who are people who like trading dollar yen, this is a pretty big breakout, I would say. If you scroll way out, if you look at the daily chart on dollar yen, we've had a really big rejection off this 137.73 level, rally break high, and then of course now down to the 1 hour chart, you kind of have this downward channel breaking out. So just thought that was an interesting pair for the yen people out there who are trading this. That's a big break. Possibly some breaks and retests could come in, though fundamentally for me, this is probably not a pair that I'm super intrigued by. One thing that we talk about often on the show when talking about dollar yen is that it does have some positive correlation to yields. And we do see yields popping here this morning. This is the 2-year treasury bond yield. And so, just a little bit of interest there. Sometimes when this is rising or falling, it can be an indicator by itself for a lot of dollar pairs. Speaking of dollar, just coming back to this big pop on the dollar, Miko, could you take a look for me at the DXY? I'd love to get somebody else's take on this. The dollar index. What do you think on it? Do you have sort of do you ever look at the dollar index when talking about USD pairs, or do you usually just trade the pairs alone?
Well, I personally try to focus purely on the price action I'm trading on the pair. I have done in the past and looked at the DXY quite a lot and tried to use it as another confluence, if you will, for a trade. Like, okay, EURUSD looks good for a buy and DXY looks like it's about to come down. So I used to do that a lot, but sometimes I find it sometimes it distracts me. So I like to just stay focused on the pair I'm trading. If I take a win, I take a win. If I take a loss, I take a loss. As long as the price action on the pair that I'm trading is good, I'm happy. But I do still look at the DXY just to see what's going on. DXY is very, very important and is approaching a big level, like you mentioned, which is kind of trying to break back above. I was expecting DXY to probably push a little bit higher at the start of the week into this level, but then FOMC happened. But now it looks like we're pulling back up. So again, I'm waiting to see how this daily candle closes, because this is a very, very big wick to the downside. And if we see it close strongly bullish, it could present some more upside back into 102, and then potentially we might see the bigger move to the downside. So I'm still quite bearish on the DXY and the higher time frames, like I think you are too. But with this daily candle, we might see a bit more upside first. So I'm interested to see.
Okay. Fair enough. And Marco, same question to you. Do you use the dollar index? I know you trade, of course, a couple dollar crosses. Do you ever take a look at the dollar index as kind of another level of confluence?
No, because I don't do it in my back testing, so I focus only on the pair that I'm trading. But yeah, I want to keep it simple. And I see on most of the dollar pairs what is happening. Like I can see on AU, there's definite news now, GU as well. So yeah, for me, it's just focusing on one pair, no news, no other indicators, just one time frame, keeping it as simple as possible, because most of the time I do execute on the phone, to be honest, because I'm somewhere out of the house, and it would be hard to look at many charts, many time frames. So that's the reason I want to keep it as simple as possible, just so I don't have to be, let's say, glued to the PC, but I can also do it off of the phone. So that's kind of the idea for now.
Sure. No, I mean, that's fair. And I think you answered it with a great response, right? I haven't back tested that. And I think that, a lot of times to both of you guys, Miko and Marco, I know, you guys have certainly spent some time doing your back testing concepts thoroughly. It actually kind of amazes me how few people actually have spent time doing that. I don't know if you've ever asked your own audiences this, but I've polled the audience in the past. It's been a while. I should probably do it again. I did like a community tab poll, and I asked people, to answer very honestly, how much time have you spent back testing? I can't remember exactly the prompts that I gave, but it was like very, very little, maybe like 2 hours max, to like extensive. And the overwhelming answers were just tiny amounts of back testing time. So to you guys, I'm sure that might sound interesting. You would think if people want to become profitable traders, they would spend some more, maybe less surprising to you guys, but perhaps to the audience that's joining us here today for the show, let that be a warning. If most people are losing money in the markets and a vast majority of people have never taken the time to dedicate some time to back testing, there's probably some level of correlation there. You should probably test your methods before you start throwing money at them. For both of you guys, I'd love to just get it is such an important topic to back test. Miko, we'll start with you. I want to ask you this question real quick. How do you back test? And I guess, do you use any special softwares? Do you do it by hand? If you're testing a concept or practicing something, how do you go about doing that?
Yeah, so I pretty much just use TradingView with the replay tool. So I go back at least 5-6 years. I normally back test all my pairs since 2016, so I like to keep it at least 5 years of good buffer. Yeah, I back test every pair I trade, which I trade 27 pairs. I've back tested all of them since 2016, and yeah, I just go through the chart, use the replay tool. I only use the 4H in the hourly time frame, so I keep it quite simple because sometimes it's difficult to back test if you can look at a wide range of time frames. Because if you can look at the daily and the hourly, sometimes the daily will print, and then you're already seeing kind of what the hourly will do next. So it's difficult to do that. But yeah, I just use the TradingView software, very, very simple to use. I take the trade, record it in my Excel, and yeah, just do that until present day pretty much. And I do it for all my pairs, and then I just go through the data. But yeah, I just keep it very, very simple. Just take the trade, use the replay tool on TradingView, and yeah, it works very well.
Yep, very, very important. But you would say it's still a lot of work, right? I mean, that's a lot of time to go through years of data, search for. But again, if you want to be profitable in this stuff, it's going to take work. If it was easy, everybody would do it. So thanks, Miko, for that. Yeah, TradingView replay function is great. Marco, same question to you. Do you use the replay function, and do you do stuff by hand? How do you back test and find your strategies, and how much work has been involved in finding them?
So a lot of work. Most of the work I do is revolved around backtesting, and I do it the same as Miko. So 5 years back, only on the 1 hour time frame, TradingView, replay tool, also combine it with Excel as well. So once I take the trades in the last 5 years, import it into Excel, put down the trade characteristics, see what works, see what doesn't work, and then I forward test it basically. So I learned the most through forward testing, I would say, because I have been doing it for the last year. And it's like a crucial step in a trader's journey. So first you have developing a strategy. Second, you have backtesting it, and I mean extensively backtesting it. Then you have forward testing, and then maybe some demo, minimum lot size, maybe $1,000 account. And then finally step 4 or 5 is, of course, live trading with the full 1% risk, or however much you want to risk. So if you skip a step, you're going to fail. That's kind of how it works.
Sure. No, I mean, that's just the truth. The backtesting process is a lengthy one. It's a ton of work, but it is very, very important. I do want to say also, guys, before we wrap up the show here today, I want to just say, if you guys are looking to learn to trade, don't follow hype. Don't follow people on social media that are showing you, a lavish lifestyle or anything. Follow people like Miko and Marco, who are real traders. They give you honest answers. They're not going to tell you that this stuff is easy. It's a ton of work, and requires basically attendance every single day, like we do on these shows. So Miko and Marco, thank you guys both for coming on the show here. And as we do wrap up, I do want to say we're dropping 2 links in the chat right now. One is a link to Miko's channel on YouTube, and the other is for Marco's channel on YouTube. Guys, make sure, if you have not already, make sure to click these links, go over and subscribe to these guys, get them on your YouTube platform. It is worth having as many real traders on your platform as you possibly can. So Miko, Marco, thank you guys both for coming on the show. And we'll see you guys back next week.
Thank you. See you next week.
Thank you.
See you guys. All right. Yes. Thank you, Miko and Marco, for both of their contributions. They've been coming on the show for a while. I love having them on. They're very technical traders, and real down to earth guys. So big shout out to them, and make sure to go subscribe to them, guys. I mentioned this earlier. If you guys would like to trial out our software, we do have a link that has been dropped in the chat. We'll drop it one more time here. If you guys want to sign up for a trial to check out our software tool, the EDGEFINDER, we have so much stuff on here. You can track the COT reports. You can take a look at retail sentiment. You can take a look at projections for central banks, seasonal trends, and so much more. If you'd like to try out our software, here is a link that's been dropped in the chat by our producer, Chandler. Thank you, Chandler, for that. If you guys would like to sign up for a trial, it also comes with a free course on how to use our software. It's really, it may come across as complex at first, but this is just powerful market data shown in a very easily to understand way. And if you want to learn how this tool could help you and all the features that it has, if you're looking to incorporate some fundamentals and sentiment into your trading as well, this is the tool for you. We have several people who are using it with quite a bit of success. We've had many people who have been able to get funded with the help of our software, incorporating fundamentals into their trading. We've just had a success story after success story of people who have used the software and improved their trading with it. So if you'd like more information, we don't want to sell it to you unless it is a right fit for you. So we dropped a link to try it out. But also, if you would like to chat with somebody about it, we're going to drop a second link here before we end the show. If you click this second link that's being dropped right now, this will take you to a spot where you can actually have a conversation with someone on our team about the software. If you want to ask about discounts that are going on right now, if you'd like to ask about how you can try it out for yourself, if you'd like to set up a meeting call with us, all of that is available. Just chat with us using this link that's just been dropped. Thank you guys for tuning into today's show. I hope you got some value out of it. I know I enjoyed doing it, and speaking with Miko, Marco, and Frank, all three were great. And we'll see you guys back in the next show. See you guys later. Thanks. Thanks for watching the show. But before you go, we are officially dropping a 100% free trading course for people who are looking to get better in their trading and learn about things like technical analysis and fundamental analysis and risk on and risk off and sentiment analysis and risk management. We have so many different topics, and we have compiled a library for you guys 100% for free. So let's go through some of the stuff here. We have technical analysis handbook. We have the risk on, risk off guide, a trading template or plan template if you need help building a trading plan, technical analysis playbooks. So definitely check this out. Again, link down below in the description. We have so much free value on our site here. I highly encourage you guys to take advantage of this free resources, and I hope that they genuinely are very helpful. You have economic figures, you have lessons on this, monetary policy. This is a big one. Retail sentiment versus smart money, seasonal trends, geopolitical events. For currency traders out there, we have some lessons here on volatility, which pairs to trade for newer traders, the highest to lowest risk things, moving averages. We also have technical guides, the fundamental analysis side of this stuff. Again, you can get access to this with the link in the description. You can see we have guides on support and resistance, trend lines, moving averages, candlesticks, MACD indicator, relative strength index, candlestick patterns. I mean, this is stuff that I wish I had at my disposal when I was getting into trading, and now you guys do. So again, take advantage. And I just want to say yet again, thank you guys so much for being such an incredible audience. Enjoy these resources.